What is up, beautiful people? It is episode 5 of the road to 100k a month. And this week we fucking cooked, bro. Like, I'm genuinely so proud of myself. We're about to hit our first 30 days trading in the next 2-3 days. And honestly, the progress we're making is just on point, bro. And this week really solidified it. Where I'm like, bro, if we can continue like this at this trajectory, we're gonna fucking cook big time, bro. So, let's get straight into it, and I'll end the video off as well with my biggest takeaways and my biggest lessons, which you guys can all apply, that I'm gonna be applying. That's fucking sick as fuck. But, starting off as tradition, our P&L, so I'll put it up on the screen, green every single fucking day, bro. And from recovering from Friday where we had that L, genuinely very proud of myself, and I'll go over all the trades as well. And then I'll also pull up the drawdown for all of our accounts. So as we mentioned, we have 5 accounts. So what that number that I'm showing right now, that's across 5 accounts. And we recovered super well. We were fucking down in the dumps. And now we're slowly recovering. And I think going into this week, we should be recovering that pretty well. As far as that, we'll go straight into it. Starting off with Monday. I don't know if you guys see that guy on fucking IG who sells suits in New York in the streets. And he always says, Monday sets the tone. That's what we fucking did, bro. We set the fucking tone. And that's kind of the mindset I had going into this week. Was like, Monday sets the fucking tone. So let's fucking follow our process. Let's cook. Also, one thing I'll mention. Monday was the first day of the week, of course, where I have not been following my strategy. I switched my strategy in the sense that, not that I switched, but my strategy, I don't know why it was like this, bro. But it was really just fair value gaps and looking for a liquidity sweep. That's how I based it. Now I still go off fair value gaps and liquidity as my main confluences, but I just add more things into the mix. Like new day opening gaps, new week opening gaps, V-shaped recoveries. Like these are all things that I've slowly started to cultivate into it. And as proven without having rigid, strict whatever, we cooked, bro. And I'm going to slowly pinpoint this, but this was like the first week of doing it. And I'll go over everything. So I'll put up on the screen, that's the trade. What ended up happening is we had a 4-hour gap that was respected. We had a 1-hour V-shaped recovery. Pre-market, we had a 15-minute pre-market open gap that ended up forming. Asia low, previous New York low, London low, all got swept. And then we ended up going for the trade. So I think what ended up happening was we won TP1, and then TP2 ended up being a break even. As far as that, genuinely, I put here on my notes, best trade feeling wise so far. And as I put there, set the tone for the week. Reflection, I could have worked on my entry point, considered a higher break even after TP1 hit, but left at the entry point. So I think we ended up having TP1, and then TP2 ended up being a break even. And I've started to do that every single trade, and I'll go over all of them as well. But that ended up being 20 contracts that we ended up placing. And it was just like, again, feeling wise, I felt very good after I made that trade. As far as that, the rest of the day, I was looking for a recovery. That was the only way I would have even traded again. In the end, it didn't happen. So we ended off being green. And as I put again here, best trade feeling wise so far, set the tone, lock the fuck in. Outside of the charts, solid day. That's what I ended up putting. Going into Tuesday, I ended up watching a vlog by Stephen Bartlett, an entrepreneur. As many of you might know him from the Diary of the CEO, the podcast. And he made a vlog and I watched it, and it was about finite time. And at the time of recording this, it's Sunday, May 10th, 1 p.m., which I'll be doing this reflection later on this evening. But it was just interesting. The whole concept of the vlog was that we have finite time. So I thought I'd mention it, but in the context of like, I will be going over once again a full reflection of my time. I recommend everybody also does this very consistently, where you reflect on the time, your time allocation. Where are you putting your time, right? Are you fucking doom scrolling all fucking day? Are you working? Are you putting in time into backtesting, into reflecting? What are you putting your time? Where is your time being allocated? As an investor capitalizes their money and says, where should we put our money? You should be doing the same with your time. That's what I'm going to be doing. Another reflection I had on Tuesday was a reminder to all of the men watching this as well, bro. Keep chasing the fucking bag, bro. at the end of the day, and I don't know why I had that reflection, but it just hit me on Tuesday, like again and again. And I already do this, but keep chasing the bag, bro. And I put here, money is the ultimate scoreboard. Like, people can say money isn't, like, that's not how life should be. Your focus shouldn't be about money. But genuinely, the way I looked at it, and an observation and perspective I had on Tuesday, was that money is the ultimate scoreboard. And usually 9 times out of 10, if you were, in case you weren't born with billionaire parents, or you fucking caught a trade on a fucking meme coin, whatever the case is, usually the journey and the quest towards attaining money goes through challenges, failures, setbacks. It boosts your character, and by the end of the time where you end up getting your fucking millions, you end up getting the bags that you want. Usually you're you're on point. You're likely disciplined because you probably focused on discipline in terms of your capital. You're likely in shape because if you were disciplined when it comes to business and money, you're likely going to be in shape when it comes to your physical aspect. All the cultivations of the quest of money end up benefiting you. Everything from status, everything from the scoreboard. And that's just a little observation I had there, was keep chasing the fucking bag, bro. Money is the ultimate scoreboard. And especially if you're young, like myself at 19, it's my fucking priority, bro. Like, I genuinely fuck everything else, to be honest. Not fuck everything else, but I always put it attention to that. But like, bro, my attention is towards money right now, bro. Like, bro, like that's it, bro. Going into that, on the trade on Tuesday, first trade, I'll put it up on the screen. We ended up having a 4-hour gap, 1 hour fair value gap. The bias for the day was I wanted to see a 4-hour fair value gap filled, and then my target would have been previous New York highs. I was still bullish and looking for longs based off a still recent all-time high market. That's how the markets have been every single fucking day, pretty much. Hitting all-time high markets, so to look for shorts, it would have to give me a good enough reason. We ended up having ISM services PMI plus JOLTS job opening news at 10 a.m. So ended up waiting patiently. And then we ended up having a 15-minute uptrend. We ended up respecting and retraced the 15-minute fair value gap. And then we entered on the 5-minute. And then TP1 didn't get hit, so we ended up hitting stop loss. As I put there, 20 contracts. And I think the main thing for it, one of the confluences that I put here on my notes was low time frame V-shaped recovery valid. And I ended up reflecting after this trading day that it wasn't. And that the only way I would accept a V-shaped recovery, like a true V-shaped recovery, is if it was a minimum of 15 minutes. So that's how I'm adding it to my bias, or into my strategy. The second day, the second trade was the same setup. So it was based off intuition feel of like, bro, we're still gonna go up for those New York highs as far as my targets. So it was an intuitive feel. We ended up getting the V-shaped recovery on the 15-minute. And then we were also following high time frame uptrend. This time we had an 8-point stop loss, so lower stop loss. And then we hit TP1 as well. I think TP2 ended up cashing out earlier, because it was just way too long. I was spending hours on the fucking chart. I was like, bro, I'm wrap this up for the day. And then that's how we ended up doing there. Thoughts, I put here, felt a little annoying. A lot of mental energy for not the biggest win, but got to get through these days. And this will go to one of the reflections I'll have later, where it's about sizing more. But that's one thing I realized. I was a little bit annoyed because I was like, bro, we waited all this time for that little reward. But again, I just got to go through these days, get them out of the way until we start getting more capital. We start sizing more. Going into Wednesday, I'll put up the trade. We had a 4-hour gap that was respected 3 times within the 1-hour time frame. 1-hour gap above, market open V-shape recovery. Once again, bias bullish based on all-time high markets the whole week so far, and likely the rest of the week. Was looking for a kickback for the entry, and then that would have been for my longs. And then we ended up, once again, same confluence is happening. And that's what I'm realizing. Like, I always go, that's one of the main things I've started to implement, was more so high time frame fair value gaps, or PDRAs, and it's been cooking for me, bro. So that's one thing I've been doing. So 4-hour, there we go. 4-hour gap, go for higher all-time highs, as I mentioned. And we had a 15-minute V-shaped recovery after confirmed. 4 hour respected, 1 hour inversed, and then we entered on the 5 minute once again. And at that point, thoughts, stop loss got hit, should have executed on the clear. So this is one of the reflections. I try to predict the market at this point. So instead of actually waiting for the confirmation to happen, which for me was either a fair value gap forming or a retrace of some sort, I tried front running it and tried predictive, like before it retraces, I'm like, oh, it's gonna happen anyway, so let's just enter. So my thoughts for that was, should have executed on a clear 5 minute or 1 minute fair value gap. Instead, I tried to predict. Lesson, high time frame bias and analysis was on point. However, low time frame execution and entry needs focus now. And that's what we ended up fucking doing. We were focused on that for the rest of the week, and it was genuinely on point. But I think that's an important one. I think a lot of people, and that's what I used to do before, is I would try and predict it before it ends up happening, instead of just, again, preferring to be late but right than being fucking wrong because you didn't wait, you didn't have patience. So when that ended up hitting, no, it didn't. That ended up being a stop loss. Second trade, same setup with extra confirmation. Same time frame, all time frames were bullish. This time entered off a 5 minute fair value gap and a 15 minute fair value gap that was forming. No TP2, just wanted to hit a full take profit, and we ended up putting 20 contracts. Thoughts, flawless. Would have been better if the first trade wasn't made, because that means we would have just hit bigger, and we would have just pocketed more. But it was the exact same setup. This time, we ended up having confirmation instead of predicting what would have happened. Also, I put here, need to continue sizing like this. Been sizing too low. Starting to get the hang out of everything and the bias well. Enough conviction to start sizing more. That's what ended up happening. This week generally was a momentum shift for me, where it was like, bro, we're starting to get the awareness, we're starting to click, things are starting to shift. Now it's time to slowly but surely start sizing more. Because that's one thing I realized. You can see on some of the days that I did have, they weren't the biggest wins. Likely maybe because it was a break even, maybe it was a win and a loss. But if I size more, those are obviously going to start compounding much more. As far as that, well, I had an extra here. More annoying than losing the first fucking trade was at the end of the session, when I ended up getting off the charts, I dropped from 1200 ELO on my chess to 1100, bro. Like, motherfuckers don't know. If you play chess, you know that feeling, bro. I dropped 100 fucking points in my chess ELO. And it fucking stained me. Luckily today, actually, we were playing chess. We were pretty much recovering that shit. Big time. But that was a fucking L, bro. Yeah, more than losing the fucking trade was... It was the fucking drop of the ELO. But going into Thursday, bias bullish once again all week. This time, new day opening gap respected multiple times. Looking solid 1 hour time frame V-shaped recovery. Looking for a fill and lower time frame confirmation for once again all-time highs. Market open swept previous New York high, Asia high, London low, and then new day opening gap filled and respected. All liquidity got swept and then looked for a V-shaped recovery and got it. Enter off the 5 minute fair value gap. So once again, same things happening. V-shaped recoveries on the 15 minute, entries onto 5 minute fair value gaps. Using liquidity as my targets or as confluences for either longs or shorts. And we cooked, I think, as far as I know here. Yeah, so we exited partials and break even. And we ended up hitting the top one, I think, or I'm not sure. And then that ended up hitting break even. Thoughts as well, a lot of stop hunting pre-entry, as you can see even on the screenshot. A lot of times where the market quickly dashed and stop hunted. Again, I had really good patience, waited for my chance, and we fucking got it, bro. As far as the second trade, enter off a 5 minute fair value gap, break even set to London high. I had 15 contracts, blah, blah, blah. Was going for longs, but switched to shorts. So that's one thing that was important. I really didn't want to look for shorts, and I ended up putting here on my notes that I didn't feel comfortable based off the fact that we were just hitting all-time high markets. And for me to hit a short at all-time high markets, I just didn't sit well with me. But we just ended up having so much confirmation and continuation to the point where I was like, bro, I'm just going to take a swing at this. So I think in the end I put a few contracts on there. Was going for longs but switched to shorts. Had a 50-minute bearish fair value gap. Had a break of structure as well. That was an important confluence for me. And then we entered with 10 contracts. And then TP1 ended up hitting and break even. TP2 ended up hitting, and then TP3 didn't hit. We just hit a break even. And then Friday, implementing. So one thing I ended up doing on Friday was, instead of only pretty much going off the confluence of previous New York low, previous New York high as my liquidity points, I have started to do PM and AM. Because I've realized that there is actually some bias to that, where it's like, again, it's just more confirmation and more points where I can see, okay, there's likely going to be more liquidity here. And that's what I ended up doing. So instead of just marking in general for the New York session from the previous day, lows and highs, specifically lows and highs for AM and lows and highs for PM. And that's what I ended up doing. And one realization, some value here as far as Friday, what I ended up getting. And this is actually one interesting thought from a psychology point in trading that applies. That I used to do from sales. And me being from a sales background, I remember I was a closer. I was a setter at the time. And we were doing like, bro, we were cooking. We were doing like 1.5, 2 mil a month. And I was a setter. I was like 17 at the time. But I never forgot this quote from this closer. He was a top closer. And he said, sales is just a self-development course with a pay stub attached to it. And I look at this just like fucking trading, bro. Trading is just a self-development course with a payout attached to it. Instead of a fucking pay stub, it's a fucking payout. It's the same confluence, and I think the way I extrapolated that is, it's a self-development course in the example that the way you are outside of the charts is the way you're going to be in the charts. If you're dialed in, locked in, you're on point, on a self-development aspect of life, you're making progress, you're getting smarter, you're focusing on fitness, you're getting healthy, whatever it is, that's what's gonna happen. So I thought I'd mention that because it was a good quote, and I remember, I don't know why it came up to mind. That was the case. And then on Fridays, I think this was the final trade. Bias was still bullish. Would look for either a 1 hour fair value gap or a new day opening gap or respect of the 4 hour gap. This is so much fucking notes here, bro. I don't want to read all of it. We ended up swiping, disrespecting. We'll look for shorts only if continuation is present. But ended up having a 4 hour gap that got respected, 15-minute V-shaped recovery confirmed, 5-minute fair value gap respected, aggressive front-running 5-minute candle, full confirmation entered, and then entered with 15 contracts. And then break-even partials got hit. And then I think that was it, I think, for the day. And I hit break-even. Thoughts was a good win to take partials and break-even. One of the observations, and this is actually one of the tips I promised everyone that I would talk about, but a really good win I took out of it was from the week, and I will be applying this. But it is taking partials and break-even, pay yourself. That's what I put here on my notes. And I realized this across my 5 accounts. I think it netted like 190 across all of my accounts. Across 20 accounts, that would have netted 800. Across 30 accounts, that would have netted 1.2k. So the observation I took out there, instead of just wanting to always hit full TP, and you can start seeing the trends in some of the trades where I have 5 MES plus break even, and I have TP1 and TP2. I will be continuing this and to see how it goes about in testing. Because like I said, I did that maths and I'm like, bro, if you scale to multiple accounts, even if you start hitting break evens, but you get that little spike and it goes into break even, and you still took partials, that's gonna fucking benefit you, bro. And as I put here in the maths, that trade alone, 5 MES contracts across all of my accounts, swiped up and hit break even, netted 190. And the point I said here, and I'll repeat it, if you had 20 accounts, that would have netted 800. If you had 30 accounts, that would have netted 1.2k. And you can imagine over a year's time span, if you start doing those, you start taking partials and it ends up hitting break even, shit's gonna fucking add up. And that's one thing I'm gonna start implementing. Well, I've already started implementing, but continuing. Second trade, ended up not having a second trade. Just not enough confluences. So entry didn't come in the end. So we ended up wrapping off the week. Now, as far as some of the week reflections, total week reflections, the first thing I realized, need to risk heavier. So new game plan in terms of risk management. Before, and it's very similar, it's nearly identical. Before, I would, all my drawdown on all of my accounts, I would divide that number by 10, and I would add a multiplier based off what is my level of conviction. So honestly, I mean, the only fucking change we're making is we're increasing that multiplier. So what I'm doing is every drawdown on my account, I'm dividing by 10. Based off my conviction levels, I have three options. Either it's going to be a 1x, which means just the base divided by 10. Either it's going to be a 1.5x in terms of like whatever is divided by 10, or it's going to be a 2x. So to make the math simple, with a $2,000 drawdown on each account, I would divide by 10. That would be 200. That would mean 200. And then obviously at a max, that would be 400 if I was to do the 2x. So that's what I'm doing there. And that's what I'll be implementing. And the reasoning behind that is I don't want to size way too much and start going way bigger, but it's slowly to start increasing the way that we're sizing so we can risk heavier. Because my priority right now is to ultimately pass these, like get my first payout and put all that money into new accounts. And likely I'll get another 5 or 10 accounts and then we can start scaling that. Likely 5, so that my psychology doesn't get messed up if we have like fucking 15 off the rip. But I just want to get there quicker, and I'm starting to get the wins, starting to get the awareness of like, okay, I know what's happening. We can slowly start risking more. Second tip, and this is one of the biggest one, and I promised you guys, I would share wisdom at the end. And it's what I did this fucking video. Everybody should write whatever you do quicker, whether it's typing on a computer, for me it's typing, or writing on a pen and paper, on literally pen and paper. It's to write what you're doing mid-trade. Genuinely, that is what I was doing from fucking Monday, because I knew it. Like this, on episode 5, my mindset was like, I'm going to record a video for these guys. I want to make sure I can go over every trade. I need to document it. I need to journal it. And what ended up happening psychologically was I didn't take bad trades. I had one L in there that I mentioned that was based off just unawareness, and again, we learned and we recovered well. But it gave me that self-presence of like, and that accountability where it's like, I'm seeing if it's a good setup. If I'm writing on my notes, 4-hour fair value gap respected, 1 hour uptrend respected, enter off a 5-minute fair value gap, looking for this is my bias, this is what's happening. You end up having that presence, and that presence in the trade where you know that it's gonna hit, or at least you know what's happening. What ended up happening before is I would take trades for the sake of it. I knew nobody would be watching. I knew I could just say, oh yeah, this was an L, this was a win. But what ended up happening was, as I was journaling in real time, so not journaling after the trade happens, in real time, you just end up seeing like in real time if this is a good trade, like if this is a good setup. And what ended up happening this week, there would have been trades where I was looking to trade, but then I looked at my notes and I'm like, it's not enough confluence. I mean, I'm just going off a 50-minute fair value gap here. Nothing else is really happening. And because I typed it down and I looked at it, and I'm like, that's only one thing. I was like, it's not an A+ setup. We're not taking it. So that's what ended up happening. And that's a tip I'm going to give you guys. Genuinely, I think this is going to be a game changer. And then Saturday, I will be instilling as well, going into next week. This is going to be one of my fucking tests. I'm going to be staring at a white wall pre-market. So right now my routine, well, I'll just mention my new routine as far as pre-market open. Being in Dubai, market opens at 5:30 p.m. At 5 p.m. to 5:15, I'm going to be doing a white wall stare. So I'm just going to be staring at the fucking wall. The science behind it is just the dopamine regulation. I realized one thing I do when I'm in trading, I'm sure a lot of you could probably relate, but you just go on your phone sometimes as you're waiting for your setup, or you're waiting for TP to hit or stop loss, whatever. What ends up happening is you just go on your fucking phone. So I want to, from 5 to 5:15, I'm going to be staring at a white fucking wall in silence to deregulate my dopamine. I've seen a lot of people do it. I'm going to go into testing mode. I'm going to try it out. 5:15 to 5:30, I'm going to be doing Wim Hof breathing. If you guys don't know what that is, literally a fucking game changer. Literally just type in YouTube, Wim Hof, 10 minutes. And it's like a 3 exercise sets of breathing techniques. Amazing feeling afterwards. And then also just marking out the session as far as what is my bias, what do I think is going to happen, and then going into terrace. I was going to the terrace outside for like 1 to 2 minutes and then go back in as market opens. But that's really it. I mean, let me see if I have any other notes. It's not working right now. It's all good. But that's it, bro. Like, genuinely a really solid week. I hope you guys took a lot of value from that. Let me know also what you guys think of this setup. This was the first episode where I went over literally every single trade. If you guys like that, let me know. If you guys don't, because I know before it was more so heavily psychology based, heavily emotions based. But what I ended up trying to do in this video was just do both. And you guys can let me know what you guys think. Aside from that, keep fucking crushing, bro. Generally, if I'm making, like, I generally feel like I'm making a lot of progress, and it's gonna end up being, and I just feel it snowballing pretty quick, momentum building. I don't want to jinx anything. I don't want to make time frames on anything, but I just feel like I'm making a lot of progress, and I hope you guys just take it as inspiration to keep fucking crushing, bro. And I hope every single buddy going to next week has an amazing week. And remember, and I think this is what also set off my week momentum going to this week, was acknowledging Monday sets the tone. So for you guys watching this, if you're watching on Sunday, whenever you're watching it, remember, Monday sets the fucking tone. So show up, let's all show up, let's keep winning, and till next time.